All right, let's take a look at this crash yesterday and see where we are in the bull and the bear kind of scenarios. And then, as usual, all my videos are on YouTube, and I'm publishing this one through the Trading View platform, so it doesn't have my image and all that sort of stuff. But I just want to take a quick look at this crash and the indicators and see where we are and see kind of what some different targets are for the bull and the bear case from here. And so I guess the big one here, this is our 2018 Volmageddon. This yellow line here is our 2-year bull market support line that we've made it all the way back up to. So we back tested this back at the beginning of this crash, and this swing has come all the way back up to this line now and back tested and rejected off of it. And so that is the big thing right now is what is the deal with the 2018 Volmageddon line here. So if we are in the bear market case and we're unwinding a bubble blow off here, which is what I have set up in this model, then you backtest these lines and break them, and then generally go down to the next trend line. But we haven't broken this 2018 Volmageddon line. We came all the way back up to it here, and now we want to see if we are breaking this 2018 line, if we're going to terminate this wave tangent and then get down to the next one here. And so this is a very rare thing on the backside of a bubble. I've taken a look at a bunch of bubbles like the Nikkei bubble and the Great Depression and the dot-com and the housing bubble. And generally when you're winding down a bubble and you have these bull market support lines, you kind of stick to them and backtest them and break them, and then you don't get back up to them. But in this case, we have broken down below the 2008 financial crisis bull market line and then gotten all the way back up to this line now. And so more often than not, when you're backtesting and terminating a tangent line, you'll get 2 hits on it. It's more often than not 2 hits. So right now, what we've done is, well, I mean, we ran all the way through this financial crisis bull market line. We've bounced off the top of that, and then we came up above this moving average, bounced off the top of that, and now we've rejected down off of the Volmageddon line here. And so in the bull case, I mean, we're still just kind of on this bull support line on this angle. And so in the bull case, I mean, you could just continue out on this angle probably until you get above this Volmageddon line. And then for the bull case, you want to use that Volmageddon line as a longer term bull market support line and not terminate that tangent. And in the bear market case, you want to backtest this line and terminate it, and then get down underneath the next one and backtest that one. And so more often than not, when you're terminating a tangent, two you'll get 2 hits on it, a double kind of a double top reversal. And so that's what we want to see right now is what the action looks like, and if we're gonna get back up to this line and terminate it, or if we already have terminated it and get down here and backtest this one. Basically, in the bear case, we're just looking for a backtest of one of these lines, and from here it could be either one. We could have already terminated this one, and we could go down and backtest this one, or we can get a double tap on this one, and then you get down and backtest that one. In the bear case, in the bull case, you just want to get above here and use it as support. And then I think the VIX, well, let's look at this moving average. The 120-day moving average sort of keeps bull markets to the upside and bear markets to the downside. And now we've started a bear market and we've already crossed over to the bullish side of this moving average. And now we've rejected off of it again. So that's a bullish move in terms of the technicals on the moving averages. But if we take a look at some other things that are going on here, like the XLF, the financials, and this is more of a fundamental look at the market. I mean, the financials broke down really hard here, and the financials barely got above the moving average, and now they've rejected hard to the bear side. And this is what you see in a bear market, is if you get above that moving average, you usually get rejected out of there really hard. And so this is a bear market indicator for the general market. And then the small caps and the financials have both done this, broken above and then just broken down below the long-term moving average. And so the financials and the small caps are not doing stock buybacks. The info tech sector is still doing some buybacks. But these are the sectors that have the most exposure to solvency risk of bankruptcy, and the low interest rates are really tough on the financials. And so these are good indicators for more fundamental indicators for the market versus technical indicators, like looking at the Elliott wave kind of movements and things like that. And let's just take a look at some other stuff. Yeah, Bitcoin made a move down. Bitcoin is so weird. It likes to move down when the market dumps. I think that's strange. And the dollar's been breaking down, and it's kind of been waving opposite of the S&P for the past 2 months or so. And so this tiny move up in the dollar correlated with a big drop in the S&P, and now it's just kind of chilling out, and we're gonna see where it goes today. But a reversal in that dollar breakdown would probably correlate with a down wave in the S&P. And gold and silver are just kind of sitting here. Like gold tried to break down a little bit, and it failed to break down. And so that's not giving us too much of an indicator. But the DXY coming down is an inflation indicator for the most part. And this Jerome Powell meeting that we just had, Tesla's off on its own land, and oil started to break down a little bit here, which is interesting. To see Bitcoin and oil breaking down at the same time as the rest of the market is kind of strange. But this is the big one. This is the big indicator here is the VIX. And the VIX has been slowly working its way down over this whole bull run. And this is a monstrous, like double. This is a huge move in the VIX here. And so this is a really big bear market indicator that we may be switching into a down wave. In terms of Elliott waves, we're looking at the possibility on the Elliott waves of this being sort of an ABC, where you get this being an A and then a B. But this B wave has gone past the Elliott wave definition of a B wave now. So so the idea that this could be a C wave down is invalidated on the Elliott wave rules. And what it could be though is just a really enormous flat correction. And so in the case of a flat correction, this would be sort of an inside flat. So probably on a flat correction, you'd be looking for a move down kind of to this area before it did another move back that way. Just on an Elliott kind of flat look. And then what else is going on? Let's look at the puts and calls. And people were going crazy, insanely long. The middle of this week, there was a record 12 million calls that were purchased, which is like 4 times the highest amount of calls like in history by like 4x. And now we've had a turnover and a dump like immediately after the biggest call purchases in history, which is, I don't know, maybe what you would expect, just because the market just does the opposite of what everyone is betting on. And so that's kind of what I'm keeping an eye on right now is the financials and the VIX, and then the moving averages and these trend lines. And so for today, I don't know if we can get a big enough movement to try to test one of these, but I want to see what direction we're going. If we start making a move up, I'll be looking for another back test of this guy. And I do think we're in the bear market scenario. And if it starts breaking down, I'll be looking for a back test of this one. before it does like a long-term swing out to the side. And that is that's kind of the look at the crash here. And I think that this is still the bear market case, and the fundamentals and most of the technicals are looking bearish, but this bounce off the top of the moving average is definitely a bullish bounce. Here we haven't broken down into bear territory quite yet, so this is uh, a bullish move in a bearish scenario is what I'm seeing right here. And so yeah, I'll definitely be watching this closely today. And I'll post more videos on the YouTube channel. If you come over to MMT Investing YouTube channel, and I'll take a closer look at several different things that are going on that channel. And you can check out my financial education playlists, and subscribe on TradingView is fine. But I don't post that often on TradingView because these videos just get frozen and the uploads fail, and I can't put my thumbnails in here, and all sorts of kind of annoying stuff trying to publish through the TradingView platform. But I try to get on here enough to you know to keep people in tune with what I'm doing with my model here, with my everything bubble model. And this is a really crazy thing that we have broken down, back tested, broken past another support line, and then come all the way back up through it, and then rejected off this one again. This is crazy. Um, so it's not weird at all to backtest this line and kind of swing out and test it again. Like that is not weird at all. And in the case of a bubble unwinding, but breaking down below this one and testing it and then coming all the way back up to this one is crazy. Like there's no bubble model I've seen that does that. So this is a super weird case. And I guess on the timeline for sort of the inflation expectations and things like that, we had a lot of fundamental changes kind of happening here. They sort of redesigned the financial system during this crash to bypass the international banks and reconnect all the international banks to the Fed, to create liquidity that the banks weren't being able to provide. And so you had this massive liquidity sell off here. And really, really, if there's going to be another liquidity sell off, it needs to be pretty soon, before we switch into kind of the recovery and the insolvency phase of this whole thing. And that's what we want to see here, is if there's another kind of liquidity issue, um, because this is not much of a down move since we've gotten all the way back up to here. This isn't really much of a liquidity kind of sell-off start to a bear market yet. And so for a bear market structure that would look something like maybe the Great Depression or something like that, like you would probably need a bigger liquidity sell-off now, to set that kind of a structure up. And guess I guess what I would think is the most likely case is to test this one again, to break down and back test this one, and then swing into a really long term kind of swing back up to back testing this one that could be like a year or something like that. Like that's kind of what I had painted in this model earlier. And this bull market run was just higher and longer than, I mean, pretty much anyone expected. This is a pretty wild thing to get all the way back up here now. But but yeah, just taking a look at this bubble model from here, that's just what to look for, is how do we react off of these long-term bull market lines? Can we stay on top of them, or do we break them and backtest them? And so it looks like to me, we've broken and backtested this thing really hard and backtested this thing really hard. And I just don't think we're going to get above this thing. I think that's going to be a line that we backtest and terminate, and we may have just done that actually. And then we'll have to take a look at the 2008 line and see the kind of action that we get on that. Oh yeah, and yeah, we're talking about JPOW, and basically what the Fed said is they aren't changing anything right now, and they expect negative rates for a long time, a year or two. Um, but he said that they're ready to increase the balance sheet if necessary, but right now they're not increasing the balance sheet as of yesterday or whatever. But the Treasury bond issuance is going up like crazy, like 4x or something like that, and the Fed liquidity is not going up, and so that is an indicator of less liquidity available to the stock market. That's sort of like the Stan Druckenmiller liquidity thing, where you don't just look at the Fed balance sheet liquidity. You have to subtract the Treasury issuance because that is taking liquidity out of the private market and using it for government spending. And so that's kind of a liquidity look. And then on the buybacks, just on this down move here, the buybacks stopped in almost every sector except Infotech is still doing buybacks. But now a lot of companies, over the last 10 years have been doing buybacks and decreasing the overall number of shares in the entire stock market. And now during this bull run, there's been a switch from less and less shares in the entire market to now companies are issuing new shares and diluting shares to try to raise cash um, to stay solvent. And so that is the thing to really look out for over the next maybe 2 or 3 years is companies that can't pay their bills and have too much debt issuing new shares to raise cash just to pay their debt, um, to not go bankrupt. And that is kind of the solvency risk over the next couple of years versus right here. This is a liquidity crunch where the banks aren't functional, and the Fed has announced now that the banks are functional again, and so the liquidity thing is over. And we'll see if that's true or not. We'll see pretty soon here if we get another liquidity rip or if we just get some kind of general movement around these bull market lines. But that's kind of the look at the liquidity event that was really, really fast. Usually at the beginning of a bubble, the liquidity event is not 1 month. It's like, 3, 6 months of stuff at the beginning of a 2 to 3 year bear market. It's usually not 1 month of stuff. So this is highly suspicious, a really deep gash, and then a huge bounce. I mean, this is obvious. The whole thing is just obviously kind of crazy looking right now, and we'll see if things start making more sense soon. And yeah, and I want to see what today looks like, man. This could be with the volatility that we have right now. I mean, we could get a huge move like all the way up here or all the way down, breaking this line like in one day. It's possible to do that like just today with the volatility that we have, and just like a little bounce off of this line so far. Um, So yeah, happy trading. This is not investment advice. Please check out my playlists on YouTube, and I'll chat it up in the Trading View chats as well. But most of the comments I do on YouTube. And do you have any other indicators? Yeah, I'm really trying to figure out the currency pairs and the bond rates because the bonds started steepening the past week, and now they're not as steep. They're getting less steep, and so I really want to see if the dollar keeps breaking down and if the interest rates keep breaking down. Because right now they're not particularly useful indicators of what's going on. But if the bonds break down and the dollar breaks up, that would be a big bear market signal. But we're not getting that yet. And so I'll keep posting on these indicators and see if they line up to where it makes sense to make a move. Because right now it's just kind of bear market fundamentals in a bull market technical space, where it's not really clear, what to do. So happy trading.